Welcome to today's midweek update. Just had some fun over in the comments. For those of you that are joining here for the first time, welcome. And well, let's hop right into things. Now, I have a quote that I want to start with today. Going to keep it very simple. Quote is this: buy right and sit tight. Buy right and sit tight. Who came up with that quote? You know it, type into the chat. Let me know who said buy right and sit tight. That's a theme of today. That's the theme of this market. Buy right and sit tight was famously said by Jesse Livermore. If you don't know who he is, look him up. Read his book. Also read Reminiscences of a Stock Operator by Edwin Lefebvre. It's about his story way back when, and one of consider the father of trend following and trading in this way. So anyhow, buy right and sit tight. Now, why do we need to do that? Well, let's take a look at the charts and we'll see why we need to buy right and sit tight. Here's a look at the NASDAQ. You can see the NASDAQ moving steadily higher, right? The NASDAQ hit a fresh all-time high yesterday. Today, pulled back a smidge. And as of this moment, it's trading at the top of its trading range. All well and dandy, right? Well, let's take a look at the Dow. And let's take a look at the Russell, right? Here's the Dow. Very different picture, isn't it? How about the Russell? Here's a look at the Russell. Very different picture than what we saw over on the NASDAQ, right? The market is bifurcated at the moment. One index is moving up, the other index is moving down. So what do we do? The answer comes from what Jesse Livermore said: buy right and sit tight. What does that mean? Right? If you've got an idea, buy right. And yeah, I'm trying to not cuss anymore, but yes, right on, my friend over here on Instagram, Vegas Sanag 98. Totally agree. Need to buy right and sit tight. So what's implied in there? Well, we need to know what buying right is, don't we? If you were on yesterday's live stream, we had a new Trade Smart Tuesday. We're testing that one out. It's something that, well, we do regularly inside our premium program. But what we're trying to do is come up with a model of, well, what stocks are we actually going to trade? Right? Well, we could trade anything. Well, we could trade this. Oh, we could trade the NASDAQ. Well, we could trade NVIDIA. We could trade Apple. We could trade whatever we want, right? Get back over here to the NASDAQ for a sec. We could really trade whatever it is that we want. So if we don't have a model of what it is that we're going to trade, that's how you end up all over the place. Oh, this is moving, let me trade that. That's moving, let me try this. Oh, well, this is down. Well, let me buy it at a value. We just end up being completely all over the place. So the way to buy right is to have a plan and to know exactly what it is that you're looking for, why you're looking for it, and to execute when you see that trade. We need to be selective. And in this kind of environment, when you have one index moving up, the other index moving down, you absolutely need to be selective because there's plenty of stocks that won't work out. You need to stick to the best of the best. For those of you that have been following me for a little while, one of the trades that I am in presently is this one here, NVIDIA. Kind of goes with that theme, right? Buy right, sit tight. NVIDIA broke out right over here. Now I'm a breakout style trader. It fits my plan. Maybe you trade options. Maybe you trade forex. Maybe you trade something completely different. The thing that we all need to do, and I'm probably going to sound like a broken record, so uh, keep on listening because you need to hear it. You need to have a business plan for your trading. You need to trade specific types of setups. So whatever the setup happens to be, and it doesn't need to be a technical thing, right? If you're sitting here saying that, oh, well, I don't look at the charts, I think that that's voodoo, great. You still need specificity somewhere in how you're going to operate. Otherwise, you don't have a business, you have a hobby. And most hobbies cost people money. And that's the bottom line. And if you want trading to be a hobby, then that's perfectly okay. I was in a job that I didn't like, that I found boring, and trading was a source of entertainment for a little while. A very expensive source of entertainment, granted, but it was a source of entertainment. We need to be honest with ourselves and figure out what it is that we truly want from the market. Here's another quote, right? That everybody gets what they want from the market. Famously said by Ed Sakota, one of the great market wizards. If you want your trading to give you consistent returns, then you need to treat your trading like a business. And that means getting specific on how you're going to operate, having an operating plan, having a trading business plan. So with NVIDIA, buy right, sit tight. I bought it back here, had earnings, held through earnings, and now it's up, I want to say close to 25, maybe 30%, closing in on 30%. It's not because I'm so great. I make plenty of blunders, right? But the plan is something that helps you to figure out, okay, I'm going to get into this one here, and maybe I'll cut one, right? Let's see. Well, what was a recent losing trade? Let me pull up my spreadsheet here and go back to one of the losing trades, right? Because that's important too, right? Not everything wins, and I want to share with you some of the ones that haven't won, right? Lest you think that people on the internet win all the time. We don't, right? We certainly don't, and that's okay because you don't have to. You don't have to win all the time. What you need to do is have bigger wins than your losses, right? So if you're winning $2 and you lose $1, well, you could play that game all the time, and so long as you're right half the time, you're coming out like a daisy, right? Here's one that didn't win, right? Bros. Let's see where Bros was now. Right, so here's Bros. Bros actually looks like it's starting to improve a little bit. I got into Bros. I got into Bros right here as it broke above those highs. I raised my stop to break even. I was stopped out just under break even, and price fell a bit further, and now it's starting to rebound. Now it looks like maybe, just maybe, it could be ready for another go. It might be on tomorrow's watch list. But that's the idea. Well, we don't need to win every single trade, right? Here's another one that didn't work out. Well, let's see. Let's find another one that did not work out. Right? Here's Sweet Greens. Right? I think that Sweet Greens took off after I had sold this. Actually, no, it didn't. Right? So over here, I bought Sweet Greens here. I got that breakout. Was up nicely on the day. Was up about 5%, 6% after price broke out. Then taken out of the trade the following day because I had my stop down here. But that's the name of the game. That's the name of the game. If you want to have something that's going to produce profits for you, you need to allow your winners to run, cut your losses short. So it's much better to take a 2% loss on this one and then take a 0.5% loss on this one and see it start to rally and attempt it again, and then hold on to ones like this, where you buy it down here and you see it run 30%. Or like this one here, the ITL. Bought this one down here as it was making the U-turn. And this one's up about, I want to say 10% or so. Yeah, about 10%. That's what you need. That's the name of the game. We want to stick with the best of the best in this kind of market environment, and that's it. And we only want to add incrementally because, again, when you have one market, whoops, that was weird. When you have one market that's moving up, right? That's the NASDAQ, and then you have another market that's moving down like this with the Dow. That's when you start to see a lot of choppy action, and that's when people can get into trouble. So the way to avoid that is to make sure that you're only taking the best of the best trades, that you're trading right. And the way that you trade right is by having a model of what to look for, something that has your whole list, your entire list of must-haves. Make sure that your trades have all your must-haves. And then have something that tells you, okay, this is what makes a good one. This is what makes a great one. And then try to go for the ones that have the criteria that fit whatever you think makes it great. Let's go through some questions. See, Keep It Simple says, really enjoying your book. Currently reading the chapter on journaling. Fantastic. Follow-up question. In your book, you talk about setting targets. How do you actually do it? Can you shed some light on that? Absolutely. Well, let's go through it. I do talk about it in the book, but we'll go through it a bit more right here. Right. So let's go to this one here, the ITL. Right. The target that I have here is 50. Right. Why 50? Seems like a good enough number, right? To be honest, the reason why or how I choose targets, it comes in a variety of different ways. We're going to get into the weeds a little bit here. So the first way that I go to select a target is based on the pattern, right? So I trade mostly O'Neill type patterns, right? If you're familiar with William O'Neill and his book, How to Make Money in Stocks, I trade most of the patterns in there. And what he found and what I found from doing my own studies, right? Like that, it's one thing to read somebody else's book. It's another thing to actually go and find the stuff yourself and see like, oh yes, that actually does work. Most of the patterns generate about 20 to 25% gains. So with this one here, I put it at the target at 50, 30% gain. That's from an advanced pivot. From over here to 50, right? If I waited for the breakout above the high, that's a classic pivot. Down here, this is an advanced pivot. That would be about a 25% gain. Something else that I also look for is psychological numbers, right? So price is at an all-time high right now, or when it broke out, all-time high, started to push higher. Where is the next major psychological resistance level? 50, isn't it? Halfway to the century mark. Okay, that's great. Then once I come up with that number, then I'll do what's called a measured move. I just simply draw. This is going to sound ridiculous at how easy it is. But what you do is you take a line, you draw it from your target to where you're entering, and then I just see where does this fall on the chart? Does this fall to an area that makes sense? Right, well, in this case, it falls to prior resistance right down here. So what this discovered was that, okay, price has already made that run. So is it reasonable to anticipate that price could make that same run again? Sure. Now I have three different confluences for this target, and that's how I come up with the target. Now, you might be saying that sounds a little pie in the sky, Mike. I don't know about that. And you'd be right. That is a little bit pie in the sky. That's why I just use the target to say, should I bother with this trade? Yes or no? If I'm able to come up with uh, multiple things for why I would come up with that target, like I just did, then to me, it's a reasonable target. One, it's based on history, based on the pattern. Number two, it's a psychologically important number. And number three, it also counts as a measured move. So to me, that's a halfway decent target and why I should take that trade. Now, do I want to give myself multiple ways to exit a trade? Yes, I do. It's very rare for me that I sell everything at the target. I always like to scale out of my trades. And this is something else that I talk about in the Trading Mind Wheel book too, is to have multiple ways to exit your trades. You'll get to that point in the book. The ways that I like to exit trades include selling at targets along the way. So one of the ways that I do that, you mentioned it in the chat there, I see. Well, one of the ways that I like to sell into strength is going to be based on my personal performance, right? So if the market ebbs and flows. So if I'm in a very strong environment where most of my trades are running 20% or better, then it doesn't make a whole lot of sense for me to start scaling out of my trades at 5%, does it? However, let's say the market environment changes. Let's say that we're in the middle of 23 and we're in a bear market. And then we start to get into this chop fest. And most trades are only running maybe about 8%. Then maybe taking something off at 5 makes sense. So I allow my personal performance to be a guide. And then I also like to monitor danger signals, and I'll also raise backstops and, of course, have a stop loss in place. All that stuff is deeper in the book. Well, when you get onto the trade management chapter, that's where all that stuff is discussed. I'm glad to hear that you're enjoying the Trading Mind Wheel so far. Worked hard on it. Question from Havoc. The question was, are you scalping and should I fade you? I am not scalping. Should you fade me? Well, I don't know. Test that strategy out and see if it works. That's basically what I would tell everybody, right? Because we're not trying to have trading hobbies, we're trying to have trading businesses. So if you collect enough data, right, and you come up with a data that says, you know what, whenever this guy speaks, I should fade whatever he says, and that makes money. I think that there's an inverse Kramer ETF that does something like that. Do it, right? Because that's what we're trying to do here, right? We're trying to build trading businesses. We're trying to make money consistently. And if fading me is what works, then do it. Let's see other questions here. Let me go over to Instagram, right? Because Instagram is scrolling over here. Question from Morena, how can I learn all this stuff? So the way that you could learn everything that I'm talking about here is a couple of different paths. Well, one, make sure that you like and follow and just consume the content. Well, we're talking about this stuff all the time. I'm streaming multiple times a week and posting videos on Instagram, on YouTube, all over the place, on X, Rumble. Go and consume that content. That's step one, right? You get it for free. You don't have to sign up for anything. The content is there. Whenever you're ready for the next step, join the newsletter. That's free too. And in the newsletter, you're getting more content that's getting delivered to you, more educational content. I'm sharing my trade ideas with you and a lot more in there. So go get that. When you're ready for the books, right? Let's say that you want to go deeper and you want to learn more from me and what I've written. I My most recent book is called The Trading Mind Wheel. Keep it simple so that he's enjoying it. A few other people have as well. In fact, Mark Minervini wrote the foreword to that book. And let me grab a copy of it. I think I've got a copy right over here somewhere. Hold on one second. Here is a copy of The Trading Mind Wheel. Here's what it looks like. Fantastic book. I talk about my personal journeys. I talk about the people that I've helped along the way. And I talk about the 8 essential skills that are needed for trading mastery. I learned a lot from a lot of different people along the way. Jesse Livermore, Nicholas Darvis, Mark Minervini, William O'Neill, many others along the way. Van Tharp, Mark Douglas, all great influences. I learned bits and pieces along the way, and I came to realize after studying for so many years that there's a lot that we need to learn in order to be successful at trading. So what I wanted to do was take the types of skills that you're going to need and put them all into one place and give it to you in as concise a way as I possibly can. And for me, what as concise as I can was about 250 pages in this book here, right? It's a little thick, not that thick. You could get through it. And so that's what I would say to start out with. Keep it simple. I wish I could give your book 10 stars. Thank you. I appreciate that. All praise be to God. And yes, rest in peace, Mark Douglas and Van Tharp. Big reason why I'm able to see further is because I'm standing on the shoulders of giants. Let's see what other questions are there. Got a few more minutes here. How do I control my psychology? Very good question from Niraj over on Instagram. So the way that you're going to control your psychology, it's not that you're controlling your psychology. You need to get to understand or get to know yourself better. One of the first exercises in the trading mind wheel is all about psychology and mindset and getting to know yourself. We have lots of different beliefs, beliefs about everything. And you could think about your beliefs as your internal programming. Think about this. Think about if you bought a computer and it's running different programs on there. That's what that computer knows how to do. That's how it's thinking. Your beliefs are how you think. Now, if you had a computer that was 20 years old, how do you think that it would run? Pretty slow, right? That's the problem for a lot of people. A lot of people are running on beliefs from 20 years ago that they've never questioned and are just running in the background. So when it comes to thinking about the market, when it comes to managing money, you're using old programming. You need to think about what your goal is, then write, and you all this is writing exercises. You shouldn't just do all this as thought exercises, because when you get the ideas out of your head and you put them onto paper, something magical happens. What happens is that you're taking the internal and you're literally, in a very literal way, taking it and making it external. And once it's on the page, you're able to be so much more objective. It's not even funny. So you get your goals out, you then write out all those beliefs that you have, your beliefs about money, your beliefs about yourself, your beliefs about trading. You write all that stuff out, and then it'll start to be easy to see. Well, I have this goal. Right? Let's say that I've got a goal where I want to be able to make 100% a year. Right? That's fairly common for people that are starting out. I have this huge goal. I want to be a millionaire. Then you start to write out all your different beliefs, and you start to maybe flesh out some things that, the market's rigged, or you need to be on top of the news, and you need to be an insider in order to make money. And so, well, what ends up happening? You end up subscribing to 50 different services because that's what you think that you need in order to be successful at trading. When you lose, you end up thinking that, the game is rigged, and then you hop over to something else, and you try that out, and you end up on this Ferris wheel for years and years and years, and it has a lot to do with what's going on up here. Let's see, well, what other questions do you guys have? Renav says that today he made a nifty trade of 60 pips. Congratulations, I'm very happy for you. Renav is asking why I am not working with Japanese candlesticks. The simple reason, this is what I learned way back when. This is what O'Neill used. O'Neill used very simple high, low, and close charts. And so that's what I did, right? So I don't even have this isn't even an open high, low, close chart. O'Neill was only interested in the high, the low, and the close. So that's what I put on my charts. And I'm used to them. It works very well for me. And that's it. It's not that one type of chart is better than another type of chart. That's those are the pebbles, right? Like what kind of chart, well, what colors, what kind of indicators, those are all the pebbles. Well, what I would encourage you and everybody else to do, right? So let's say that you're starting out and you're trying to learn this stuff. Find somebody that resonates with you, right? A person that resonates with you, and also their particular style, right? Because maybe you like the way that I sound, but I don't really trade stocks. Find somebody that maybe sounds similar and trades forex or trades whatever it is that you're looking for, commodities, let's say. Find those people and model them. Right? And don't deviate from what they do. Do what they do, and then over time, then you could start to learn, well, I kind of want to make this tweak here and make that tweak there, and personalize it for myself. That's how you're really going to get ahead. Let's see. Here's another question from Keep It Simple over on YouTube. Let's say you are fully invested and later you sell some quantity into strength. Love that. Do you wait till you completely close your position to initiate new positions, or do you buy while you partially sold? I will buy the moment that a new trade appears and is a high quality trade per my system. That's one of the great things about having a whole model book of what it is that you're looking for. You have clarity. So when the trade that you're looking at shows up, I take it. Simple as that. And sometimes I'll put on positions rapidly, sometimes 3 or 4. Think at most probably about 5 at a time, brand new. At the same time, let's say that this week right? This week I started the week by adding 3 brand new positions. Let's say that it was more than that. Let's say that I decided to add 5 new positions. Let's say that we're in a very hot environment. Market is generating lots of great ideas, 5 new trades, great. Put them all on. What I want to then do is see how those trades work before adding something else, right? And I think that this is part of what you're getting at in your question. Portfolio heat matters. What's portfolio heat? You'll find out. Keep it simple a little bit later in the book when you get to the risk management chapter. Later in the Trading Mind Wheel book. Go get it on Amazon. I have to get better at plugging my own stuff anyhow. So with the risk management and with portfolio heat is simply what happens to your account if every single one of your stops is hit. How much are you down? Both from your open risk as well as your initial capital risk, right? So all those profits that you had, right? Like right now, I'm sitting in this trade VITL. What happens if price falls and stops me out of everything? You need to know that number. That's what portfolio heat is. You need to be okay with that number too, right? Or you need to have, let me rephrase, your business plan should outline your numbers. And that will be your guide to say, okay, how much risk am I willing to take here? And your business plan should be rooted in reality. Some of you might be thinking, well, I'm new. How can I come up with a business plan? The way that you could come up with a business plan is by modeling somebody else. That's how we all start, right? Like I didn't come up with all this on my own when I was first starting out. I modeled O'Neill. And then later on, I modeled Van Tharp. And then later on, I learned from Mark Minervini and I started to add all those different kinds of things. Started to model Nicholas Darvis. There was elements from him that I was able to take and integrate into my trading. That's how you end up building a business plan for your trading. And if you come up with a plan and you write it all down, it's going to be so much easier for you to follow. Yes, it will take a little bit more time, but I promise you that little bit of time is going to save you a lot of money, will save you even more time down the road, and will be well worth it. Very good question. Over on Instagram, can't pronounce your handle, but your question was, when do you move your stop loss? I moved my stop loss a couple of different ways. The first way that I want to move it is to get my stop to break even as soon as possible when I'm in a trade. So for this trade here, right, in VITL, my objective was to get my stop to break even ASAP. The moment that I get my stop to break even, then everything else in the trade is gravy. That initial risk is off. And I like to look at that initial risk as my cost to see if I'm going to be right. It's my cost to see, am I going to make money on this? So the quicker that I'm able to get my stop to break even, the quicker that initial cost is back in my pocket, right? This is a business. We want to keep our costs as small as possible. And if we could have cost that, or trades that I should say that are cost free, that's great. Keep them rolling. So I will move my stop to break even as soon as possible. And the way that I'm doing that is I will look to see when does price start to move heavily in my favor, right? So on this trade here, I got in down here, right? And let's turn off the annotations for a moment. Makes it a little bit easier to read. So I got in down here. Price breaks out over here. Very nice update, up about 5%. On that day, I'm starting to creep my stop loss up, right? Because price is already showing that it's following through. So where would the expectation be if price is following through? Typically, winning horses don't back into the stable, to quote, I want to say Dan Zanger. Typically, winning horses don't back into the stable. Well, probably other people have said that quote too, but he's the first person that popped into mind. So if price breaks out like this and then the next day it's down here, well, that's abnormal, right? So rather than having my keeping my stop down here, I'm able to start to raise it up and then raise it up and raise it up. And then as price is following through over here, now I can raise my stop to break even and even get my stop higher than break even. On this, I have two stops, right? I did a bracketed stop. I put a portion of my stop at 39.90. Today's low was 40 bucks on the nose. So came within 10 cents of the stop. I still have my full position. Let the market decide. Use technical levels. That's what I like to do. And yeah, find if you're using charts like I am, make sure that you have multiple confluences. I didn't just pick 39.90 out of a hat. There were multiple reasons for that stop loss. And if I'm taken out, I'm taken out. If not, then price continues to run. Can we interact with you through email? Absolutely. Hop onto the newsletter, right? And then you've got that email, then send me questions and I'll interact with you as best as I can. I do get a lot of emails though, so I'll do my best to reply. The way to for those of you that want to interact with me a lot, we do have the premium service. We have a private Discord room, and I'm talking with our group all day, practically every day. I take Sundays off because it's the Lord's Day, and I just started to be a lector at my local parish, and I'm also going to be an extraordinary minister of Holy Communion. It used to be called Eucharistic ministers, but now it's called an extraordinary minister of Holy Communion. So I'm very excited about that. I'm being installed on Sunday, this Sunday, which is the solemnity of the most holy body and blood of Christ, Corpus Christi, this coming Sunday. So, all right, it looks like we are about 10 minutes over. One very important question to answer because this helps the business, and quite frankly, I've been terrible at marketing. But can people outside of the US join the premium service? Yes, you can. We have people from all over the world, people from Canada, people from Europe. We have someone from Australia. We have someone from India. People from all over the world inside of the program. We are trading primarily US stocks. So if you're interested in trading US stocks, then this is a great program for you. I also trade crypto, not that often, but I do trade crypto. We do have a crypto channel. I'm not swing trading crypto. Most of my crypto trades are meant to be longer term, but we do talk about crypto. The main thing about it, like if you're looking for just, hey, I want to get somebody's trade alerts. Well, I do post all my trades in our Discord, and I share my plans and my rationale and all that. The whole purpose of it isn't to hand out fish. I'm trying to teach everybody how to fish. And the way that I'm teaching people how to fish is by being as transparent as I possibly can, sharing thought process, rationale, plans, everything ahead of time, setting up the alerts so you could follow it in real time if you want to. We have a whole educational library inside the program. And we also do live group coaching multiple times a week. So picture something similar to this, but where the microphones are open and you're able to ask me questions live, and we could end up going a lot deeper. That's what our premium service is. It's over on marrowwealth.com. Go check it out. All right. that's it for today. I want to say thank you all so much for joining me today. Lots of great questions as always, and I will see you back here next week. Take care. Much love. Peace out, everybody. And once again, well, we do have multiple shows. Right? We do have multiple shows. There's going to be another, the Traders Mind Chat show that's coming up on Friday. That one is streamed to all the platforms except for Instagram because we do it landscape. And from what I've seen over on Instagram, the landscape doesn't work very well. So we're just going to do that one to Facebook and LinkedIn and YouTube and Twitch and X and Rumble. Sorry, Instagram. You guys are once a week, but hop on over to those other platforms and we'll see you there. Take care, everybody. Again, much love. Peace out. God bless. And I'll talk to you again real soon.